Hello, traders. Cousin Vinny coming to you from theclosingprint.com, March 19th, 2023. In this edition of your weekend video newsletter, we'll discuss the mixed signals we currently have. We did note that the heat map has changed from red to yellow. That's improving for both the U.S. markets and international ETFs. With growth stocks rallying and the potential for small caps to find support, we're looking for a bounce this week, but we'll start the Monday session with a bit of caution. We want to see what the markets have in store, and we have the Fed this week as well, with a potential pause or a rate hike of smaller significance from Jay Powell. We have S&P support at 3,800, 3,850, and resistance at the call wall at 4,000 and 4065. It's interesting to note that price action closed right on the vol trigger at 39.50. Bottom line, we'll start the week watching for signals and especially looking for the NASDAQ potentially to follow through this week. The NASDAQ Composite and the NASDAQ growth stocks rallied last week. We put in a higher low on Monday. Stochastic, MACD, Kopach cycle are all bullish. RSI is rising above 50. We're above a volume by price support level, which suggests that we could see a higher low and a push to these pivot highs that we put in on February 2nd. That is, in case yields start to move lower. If we do see the yields bouncing, then we'll probably see more consolidation this week. It's something that we're watching. I'll let you know during the live session. Bottom line, the NASDAQ was very bullish last week, up 5.83%, going into Fed decision on Wednesday. The S&P 500 also closed a bit higher, up 1.43%. We bounced off the 50% retracement level and have seen RSI rising as well. We need to get above this volume by price band area, above 395. There's a lot of gamma between 395 and 400 that we need to take care of, but SPY was ex-dividend on Friday. So while there was some selling, it didn't drop off and take out the lows of the week or that 50% retracement level. From here, we're moving on to the weekend post-witching gap, where there's going to be less market gamma to keep price contained in the small range that we experienced last week. That just means that the actual trading range is expected to increase this week. So we're looking for a test of that upper area around 400 or the 380 level that we tested on Monday, and look for the range to expand. Obviously, small banks are in everyone's minds, and the Russell 2000 has an abundance of them, along with small cap energy, both of which have been very weak. We're looking for an oversold bounce. We're right at the December support level. So we'll be very keen to see how RSI, MACD, and stochastics behave this week. Kopach cycle is in a bearish trend, so we need to see that turn as well. That'll all be a function of price and in the hands of Jay Powell with his rate decision this week. Bottom line, all three charts were a bit oversold on Friday. We're looking for a bounce this week. With Jay Powell out with his rate decision, we are watching core CPI inflation, a 12-month percent change, which has been moving lower. Core services were higher, but total core has been turning. At the same time, real GDP has been increasing. These are numbers and data from the Fed, and something you've heard Mondo talking about quite a bit. GDP output was modestly below pre-pandemic trends, but it has been growing at a 1.8% level. Businesses are making money. And again, if you've been listening to Mondo in the trading room, he's been very busy. And finally, something from Larry Williams' presentation that's available to Stock Charts members, and something that Larry does a great job of presenting. Just want to leave you with the idea that inflation going into Powell's actions on Wednesday, the blue line. And in the past, when this cycle peaked, like in 2009, and started dropping off, the markets bottomed March 9th of 2009 and continued on into this secular bull market. Not saying that that's the case again, but back when it peaked in 2011, that was the debt ceiling debate, I believe. That dropped off dramatically like it is now, and the markets continued to rally. So make sure you check out Larry Williams' presentation, especially if you're a Stock Charts member. I'll be sure to post that in the Vinny's Alerts channel on Slack if you want to review that. I think it's worth your while going into some of the seasonally stronger months of the year. Yields fell last week. Growth stocks rallied. With that in mind, bonds did rally and are outperforming commodities at the present time. As this moves higher, that tends to be a headwind for stocks, so not all is rosy as traders flock into the relative safety of the bond market. And falling commodity prices suggest that the economy is faltering or slowing. These are all things that Jay Powell will be thinking about this week. And with regard to positioning in TLT, we are at a little triple top right here, or resistance area. You can see volume by price is pretty well defined. So if we start to push above 110, that would mean yields will be dropping again this week. TLT moves higher, yields move lower. Watch for the NASDAQ to continue its ascent that it started last week. And the reverse if yields start to push higher and TLT finds resistance here to start Monday and Tuesday trading. A quick check of risk on or risk off indicators currently showing that junk bonds are in a narrow range between 92 and around 88, chopping around here. This didn't fall off dramatically like I expected to see last week. Instead, we're holding. That's a good sign. We would like to see IBB and IWM turn up. These are both risky asset classes and would like to see a bounce. That would reflect a more bullish view. Crude oil has been dropping with commodities. That's generally what we've been looking for to fuel more upside, as consumers will have more money to spend. Gasoline prices moving lower would be a good thing. Bitcoin did bolt higher. That's something you might want to check out. If we see a follow through in Bitcoin, stocks like Mara, Marathon Digital, and Riot. Supposedly, Marathon Digital mined a very large block of Bitcoin. So I don't know what that means. I'm not an expert in Bitcoin. I can just assume that with price action and the volume indicating we could see a follow through, watch Riot as well as Bitcoin continues to show strength, and most likely it will continue higher, given no immediate resistance in the short term. With fear, we've seen gold moving higher, a little safety trade going on. And in Larry Williams' presentation, he talks about how gold tends to lead inflation. So we're watching gold here. I wouldn't be buying gold this week until we see if it peaks here, if this is resistance. And as mentioned on Friday, I'd prefer silver, which is as trading at a discount to recent highs rather than at highs like gold is. So if I was thinking about precious metals this week, depending on how we start out, I'd be looking to buy silver instead of gold. Brent crude oil, as previously mentioned, this is at a 14-month low, levels that we saw back in 2021. And with commodities moving lower, the CRB index, which is heavily weighted crude oil, also dropped out of a 24-week range. We'll see how that works out. Generally, when commodities are moving lower, especially copper, that's forecasting weakness in the economy. So this is something we have to pay attention to going into the summer months, in addition to weakness that we've seen in the US dollar. So watch the dollar. If this starts to drop off here, watch gold and silver. Those should respond in opposite correlation. Takes fewer dollars to buy the same amount of gold. When the US dollar is rallying and when the dollar is dropping, it takes more dollars to buy the same amount of gold. So gold prices move up. Bottom line, we have a lot of mixed signals. We got Jay Powell on Wednesday. So we're watching how the 10-year yield starts out the week. That could give us an idea whether or not we'll see a follow through in the NASDAQ. Sectors has started to improve a bit, not markedly, but we've moved from red back to yellows and oranges now. There's still some red left on the screen, especially in energy, aerospace, and defense. In addition, we're seeing a slight improvement in international markets, though what we've seen lately is a more or less consolidation over the last few weeks, with a good example in Turkey, which rallied from July last year into the highs in January, then started moving sideways. Other countries like Greece hitting a high in February and pulling back with the markets, along with that of the UK and France. Italy, very similar. Germany holding up a bit better, but still consolidating. In addition to what we saw with Spain, not pulling back too far, still in a really nice trend, consolidating at present, watching RSI. So the international indices are consolidating with an eye on putting some money to work in the international indices once they've completed their consolidation. With another mixed signal, this is telling you to be cautious as this line is dropping. That's telling you that consumer staples are outperforming consumer discretionary. Generally speaking, you'd want to see consumer discretionary pushing higher relative to consumer staples, with all of the sectors moving lower for the most part, with the exception of semiconductors, which is an area we would most likely focus on this week. If we get a follow through in semis, we also saw communications doing very well, and of course, technology. We're looking for a follow through. If yields continue to move lower, look for tech, communications, and semis to follow through. Here are the IBD 50 for the week. Continuing the theme that we saw last week, if yields move lower, we're looking for some of these tech stocks, communications, and some of the restaurants to follow through. We've also enabled stochastics, so we want to see stochastics oversold and turning. AMD is a bit extended. It did follow through last week, broke out above that 90 level that we were watching for. Analog devices also look strong. Looking for that to continue. A little bit of selling on Friday. No doubt people taking profits into the weekend. Some of the retailers like BJ's, we're looking for a follow through. Other semiconductors like Lam Research, LRCX, we're looking for that to continue higher. Stochastics near 80. Lattice Semiconductor. And we're looking for a Mobileye in particular to follow through, especially if the EV stocks continue. Tesla did manage a bounce last week off the 50-day. We're looking for a push higher. With respect to Mobileye, looking for volume to increase like we saw on Friday. On semiconductor, watching this 50-day level, the 21-day, if it does follow through this week. The home builders, again, watch Larry Williams' presentation. I'll post a link in the alerts channel. RBNC with a better setup for the week. Revance Therapeutics, looking for a follow-through with the stock retesting this breakout level, range bound, little fade last week, but showing relative strength versus the banks. Volume was above average, stochastic and MACD both turning. Looks primed for a follow-through into this week. Supermicro SMCI with a little bit of selling on Friday, but started a bounce on Wednesday, Thursday, a nice bullish candle on Wednesday and Thursday. So we're looking for a follow through here. Watch MACD needs to turn. Stochastics turning up. Tri-Point Homes, another theme that we're watching for with home builders continuing. Lennar reported earnings last week, beating estimates and showing good guidance. Again, Larry Williams' presentation plays on this, and I think something you should be paying attention to. TPH, huge volume on Friday. Stochastics, MACD both turning. RSI is above 50. Looking for a breakout. Relatively inexpensive name at $24. The company builds single-family homes in planned communities in major metropolitan areas in California, Arizona, Nevada, Washington, and Texas, among others. It reports earnings in about 30 days. Another home builder, Pulte Group. Nice little reversal, starting to push off of the 21-day and the 50-day. Volume was above average on Friday. MACD's turning, stochastics rising. It reports earnings in a little over a month in April. Looking for a follow through here. Looking for all of these home builders to continue. Trade desk, also potential for a follow through. MACD and stochastics rising. RSI above 50. This company, as you know, is a self-service platform for ad buyers to purchase and manage data-driven digital advertising campaigns, which has shown improvement. With another name in this industry group, this is Perion Network. This is an Israeli company that provides digital advertising solutions to brands, agencies, and publishers. This is also showing similar price action. Stochastics MACD rising, RSI above 50. Looking for a follow-through. Trending 9/21 50-day, pulling away from the 200-day, while the stock trades at 52-week highs. Wingstop trading at highs, looking for a breakout. It's been trending above its 9/21 50 and 200-day moving averages. All four moving averages up and to the right. MACD's turned and crossed. Volume shows accumulation by institutions. Stochastics rising. Could consolidate a little bit more, but if the theme plays out with stocks like Texas Roadhouse, as well as Yum China, the restaurants and bars, these two have been under accumulation by institutions, along with Darden Restaurants, which has been consolidating since the beginning of January in a sideways range. Either breaks higher, I'd be bullish above 152, bearish if it drops off below 142. But the restaurants and bars look pretty good going into the summer months as crude oil continues to move lower, lower gasoline prices fueling the pocketbooks of consumers, with a hopeful pause by the Fed on Wednesday. Here are some stocks showing relative strength, which if you check the opening monologue screen, you can see that there's about 24 stocks that look set up and ready to follow through in this particular group. American Realty Investors, ARL, acquires, develops, owns income-producing residential, hotel, and commercial real estate throughout the U.S. You would think with all the talk about real estate that we might see more weakness. Perhaps this company is buying properties on the cheap as real estate pulls back. Maybe some of the distressed properties that are out there having issues with lending. Regardless, price action shows relative strength, and volume suggests institutions have been buying. It does report earnings in 10 days, so perhaps we can day trade it or wait until after earnings are reported to make a decision on ARL. Agilon Health, this is a relatively new stock. It started an IPO in early 2021. The company provides capital and a business model platform to physician groups looking to open Medicare-centric practices. And as you can see, it's making higher highs and higher lows. Volume picked up markedly towards the end of the week, following through. The company reports earnings in May. So we got a nice breakout above these pivots on Thursday and Friday, looking for a follow-through in Agilon Health, which analysts are estimating will flip to a profit in 2024. Here's something interesting that I came across this weekend when running scans. This is a Direxion Daily Microsoft Bull, 1.5 times shares. The point is buying dips on this instead of spending $280 as of the close on Friday buying Microsoft shares. You could also participate in Microsoft at a heavy discount. Look at the volume on Wednesday, Thursday, Friday, if this does follow through. Right now, it's a bit extended, so keep an eye on this one. I just thought it was interesting and something I wanted to share with the members. I also found one that is sponsored by Granite Shares, 1.5 times long NVIDIA daily ETF. So if you don't want to spend $257 per share on NVIDIA, this is a way to participate at a discount if you don't want to put that much risk on the table. Volume has been picking up. Relatively new asset class for Microsoft and Nvidia. Something to consider going forward. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for Sunday, the 19th of March. Again, to repeat, we have Fed Powell on Wednesday. If you're bullish, you'd like to see the 10-year yield moving lower. That will help us with NASDAQ stocks. We'll be looking for a follow-through and those growth names that were bullish last week, especially with semiconductors and communications. I'll send out a watch list later tonight around midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, take care, have a great weekend, and we'll talk to you soon. Ciao.